Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 18th of January 2021 and we're reporting some economic figures out of China, which is now destined to grow larger by GDP than the United States before the end of this decade. So let's take a look. It's interesting that no sooner had we published a video yesterday entitled "Why 20% of Americans Have Never Had It So Good, at least financially." This morning it's reported that China is likely to be the only major industrial nation to produce a positive GDP figure for 2020. Notwithstanding this, it's now predicted to overtake the United States as the largest economy 2 years earlier than originally forecast, in 2028 no less. Now recently we've produced a series of videos on China warning about this development. The two most recent of which were the price of upsetting China and China not just on the rise but restoring its original power. And we've placed links to all of these videos we've just mentioned below. Now we highlighted that although we in the West, and the United States in particular, are absolutely right to call out China's human rights record, trade abuses, intellectual property theft, and a determination to dominate currency and commodity markets, most of the sanctions, tariffs and punishments tended to harm those countries imposing them rather than the recipient receiving them, adversely affecting the US balance of payments further and raising prices for importers, not to mention the effect of any retaliatory tariffs. Now we shall in a moment take a look at the article published by Bloomberg highlighting these issues with China and which has forecast its almost unstoppable growth. Now at the time of writing this article, gold and silver a little moved today, with gold after an immediate drop on opening managing to rise some $9 and is standing at $1,837, and silver is down just 8 cents at $25.10, though it has been lower earlier. It's important to bear in mind that China is a major importer, purchaser and user of gold and silver, and so any form of improvement in their economy is likely, not guaranteed, but is likely to reinforce and support precious metal prices, at least to some degree. So please, once we've read the article, it's of some few minutes, quite a few minutes length, do let us know your thoughts and whether you agree or disagree with the authors. And of course, as always, if you haven't already done so, please subscribe to the channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published, as we will end this video at the completion of the article. So let's now take a look. Bloomberg article dated January the 18th, 2021. China's growth beats estimates as economy powers out of COVID. China's economy roared back to pre-pandemic growth rates in the fourth quarter as its industrial engines fired up to meet surging demand for exports, pushing the full-year expansion beyond estimates and propelling its global advance. Gross domestic product climbed 6.5% in the final quarter from a year earlier, pushing growth to a 2.3% for the full year. That leaves the world's second largest economy driving global growth and potentially passing US GDP sooner than previously expected. The V-shaped recovery from the biggest slump on record was engineered by getting COVID-19 under control and deploying fiscal and monetary stimulus to boost investment. Growth accelerated as the nation's factories revved up to meet demand for medical equipment and work-from-home devices in an export bonanza that saw it ship 224 billion masks from March through December, almost 40 for every man, woman and child on the planet outside of China. While the revival makes China the only major global economy to have expanded last year, it didn't come without cost, as long-term imbalances worsened. Consumption lagged industry as workers tightened their belts, and income inequalities widened, as they have elsewhere around the world. There's a huge discrepancy between production and consumption, said Bo Huang, chief China economist at T.S. Lombard. I'm not very optimistic about domestic demand, as wage growth is not back to pre-pandemic levels. The stimulus to support the economy through the pandemic has been accompanied by a surge in debt, which authorities are now seeking to curb as the recovery takes hold. At a December meeting to lay out economic goals for 2021, the ruling Communist Party signalled that stimulus would be gradually withdrawn, although it would avoid any sharp turns in policy. And if we look now at the key highlights, we can see industrial output rose 7.3% in December compared with a year earlier and 2.8% for the whole of 2020. Retail sales growth slowed to 4.6% in December from 5% in November. For the whole of 2020, sales shrank 3.9%, led by an almost 17% drop in catering and restaurants. Fixed asset investment was 2.9% bigger in 2020 than in 2019. The economy expanded 2.6% on a quarter-on-quarter basis in the final 3 months of the year. The jobless rate was 5.2% at the end of December. The Chinext index of small caps closed 1.9% higher, while the yield on the most actively traded contract of 10-year government bonds rose 3 basis points as of 4:12 p.m. in Shanghai to 3.17%, set for the highest in 2 weeks. The onshore yuan weakened 0.07% to 6.4864 per dollar as the greenback rebounded. Emerging from the pandemic, larger than when it started, is a capstone to a dramatic year for the world's second largest economy, which began 2020 with an historic first quarter slump when the coronavirus lockdowns brought most activity to a halt. Even though China's annual growth was the slowest in 4 decades, a global contraction in output means China increased its share of the world's economy at the fastest pace on record, according to World Bank estimates. Based on projections from the International Monetary Fund, China will now overtake the US by 2028. Please note that. It was originally predicted for 2030. China will now overtake the US by 2028, 2 years earlier than previously predicted, according to Nomura Holdings Inc. China is the only major economy to squeak out growth last year, a testament to their successful pandemic containment efforts, said David Chow, Global Market Strategist for Asia Pacific at Invesco Limited. Looking forward to 2021, all eyes will be focused on whether China's dual circulation strategy, relying on internal consumption-driven growth, will take off. Economists expect China's GDP will expand 8.2% this year, continuing to outpace global peers even as they begin to recover due to a rollout of vaccines. Growth this year will depend on whether China can prevent a large-scale resurgence of virus infections and on whether it can pass the baton of spending from local governments and large state companies to consumers and private businesses. The government has recently imposed travel restrictions on several northern cities due to small-scale virus outbreaks, including locking down the capital of Hebei province, a city of 11 million people near Beijing. We shall end it there for now, otherwise the video will be too long. Having said that, we forgot to mention that Bitcoin is up nearly $1,500 again today, recovering some but not all of the losses that we experienced last week. Keep an eye on Bitcoin. There's a lot to come there, and also on platinum. And later this week we shall be producing episode 3 and the final episode of our platinum forecast for 2021. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.